Hi guys, welcome to our market update. It's been a second and this is an evening version, so we're going to try something a little different. If you watched it before, you know how we do it. We're going to give you really quick information, keep it under 10 minutes. While David's walking us through what's going on with interest rates, I'm going to have the clicker below kind of walking us through the numbers of what's going on with the market. And something interesting to really look at, as you see that clicker below, is just look at the properties under 700,000 and how low that number is getting, but across the board, really, really low inventory. Okay, David, take us right. How are interest rates looking?
Well, I mean, Vinnie, I got to tell you, I'm sorry that we missed our update, last week because it would have been good to go over a lot of different things with people because how me and you have been talking for a while, it seemed like things were coming down, things were getting a little bit better. And then the inflation data came out for January and inflation actually went up. And if you've been following us, you know that inflation is the nemesis of mortgage rates and bonds. So when inflation actually went up, which was not too big of a percentage point above what it should have been, but it was still 0.20 above where it was projected when it was supposed to fall. So what did that do? It automatically pushed up all the interest rates. And that's a downer because we were on a great downward trend for literally probably 2-3 weeks. And after that data came out last week, now we're back up where your average 30-year fix is like 6.875. FHA is like 6% to 6.25, and VA is the same. But how do you talk to us? 10 days ago, all of our VA loans and FHA loans were all being locked at 5.625. So, not the best news for interest rates. And then this week alone is where we're going to have all sorts of data coming out with Fed speaking all week long, lots of important factors. And I think we're going to hear this week, Vinny, that the Fed is going to probably be more hawkish than anticipated. And by that, I mean, they were before going to increase their federal funds rate by 0.25. I would not be surprised now if they increase that a half a percentage point. And I think that's going to start tipping us over into more of a recessionary period if we continue to do this, because that is not good, because there's a lag factor of 6 months when you increase these rates of how it affects the economy. I know that was a lot, so sorry about that.
Yeah, I know, and the connection was a little off too, so hopefully
the other thing that was interesting is...
Oh, go ahead. What was the other thing interesting, David?
I was going to say, the other thing that was interesting is, wholesale prices were up also. So wholesale prices mean that's the price your stores are buying large amounts of goods and then reselling it to you. Well, if their prices are up, they're simply going to pass them on to you, which is not good either.
Well, and something to think about for people out there. So rates are going up, like David's talking about, and fluctuating, I guess. All right. One thing to think about, as the market is changing, inventory has trickled down on a consistent basis. One thing is happening, there's a lot more programs out there, right? So programs that I think we've talked about in the past, the San Diego Housing Commission has a down payment assistance program. U.S. Bank is offering 3% down, no PMI program. I mean, there's a variety of different programs out there that might work for you. So again, if you are one of those people that have been hoping to purchase, right, and going, well, I don't know, interest rates are too high and it's not the first time for me. This could be a fantastic time for you. I mean, give David a call. And I mean, David's as honest as they come. He'll tell you, hey, you know what? I don't know if this is going to be the best file for me. And you might be better off for maybe the San Diego Housing Commission program or a U.S. Bank program.
Which is a great program, Vinny. It's a great program.
Yeah. So, I mean, David, give David a call. You'll see the information in the clicker below, and he can kind of walk you through to see if he might offer a good program for you, or you might be better for one of those other programs. So something to really think about. Again, we want to.
We didn't mention it.
Yeah.
Sorry about that.
David. No, go for it.
I was going to say, like, when you're mentioning great programs, if you don't want to live in the city confined areas and you want to be more rural, it's a great program for 100% financing is that USDA. which I know, Vinny, you're good about finding houses out there, searching around. They're not the easiest to find. You need a really smart realtor, hence you better call you and look up the USDA loans, because that's actually enables you to get a house. Certain parts of Ramona have it. Even some far areas of Poway have it. And then once you go into Alpine, a couple other areas further, you can get into a house with no money down, and there's no mortgage insurance, and the rates are lower than if you put 20% down. So that's a great program too. And it's out there and available for people. So don't give up hope. Oh, Vinny, we forgot to mention the groundbreaking news. And I'm not talking about you switching to Geico. I'm talking about FHA lowered its mortgage insurance premiums to 0.50. Nice. Why is that important? Because previously it was 0.85. So literally they just lowered their mortgage insurance. That's going to save you a couple $100 each month. That's huge. So I think that's our huge thing, today, Vinny, is for people out there that only got 3.5% down payment. FHA is going to give you a better interest rate, and now they're going to be competitive with the mortgage insurance too.
Yeah, so just because it doesn't seem possible, you never know. Also, we have some upcoming buyer seminar. Reach out or comment below if you have questions about when those are. Love to get you there. Also, too, if you're following us on YouTube, you'll see a lot of information. Please subscribe when you have a second. Okay. Now, we love giving the chance for you guys to win some money. So if it's really simple. All you got to do is text for your chance to win $50. This was the question for last time we were here. What was the least expensive detached property to sell in Rancho Santa Fe so far this year? Do you remember your guess?
I think I did 2.7.
Okay. He was a little off at 1.7.
Oh, so, now was that a major fixer?
Not too bad. Not too bad. I think it had a loan that closed on it. And that might be something that might to incorporate this. Yeah. So there is some value once you just got to be aware. I mean, if you're willing to look past the nitty gritty of a property, you might be able to find some opportunities. Now, here's the question for this week. What's the most expensive detached property to sell in San Ysidro? Most expensive.
Oh, now, geez, man.
We're going to two different areas right now. Rancho Santa Fe to San Ysidro. So what's your guess, David?
700.
700 his guess. What's your guess? All you got to do is text.
Let's go. I'm going to go 750. 750.
That's his guess. All you got to do is text below for your chance to win your money. Thank you guys for watching. Please subscribe, please share, and reach out with any sort of real estate questions that you might have. Bye.